Welcome to the Deep Dive. We cut through the noise to give you the insights you need fast. Today, we're doing a deep dive into Mahindra and Mahindra, M&M, a really fascinating, diversified Indian company. Our mission, pretty straightforward. We're unpacking their unaudited results for Q1 FY26, so that's the quarter ending June 30th, 2025. We've got the details from their official releases, the financial statements, and their analyst and press meet presentation. So get ready. We're going to make sense of some pretty complex financial stuff, maybe find some surprising facts too.
Exactly. And, looking at these M&M results, it's really valuable for you, the listener. It tells you about M&M's health, sure, but it's also a window.
A window into what?
Into broader industry trends, economic resilience, especially in a dynamic market like India. How a giant like M&M performs, well, it says a lot about the bigger economic picture.
Okay, right. Let's dig into this then, starting with the big picture, the consolidated results, headline numbers first. So M&M reported consolidated revenue of Rs 45,529 crore for the quarter. That's a pretty significant 22% increase compared to the same quarter last year, Q1 FY25. And their consolidated PT profit after tax that came in at Rs 4,083 crore. Again, a really remarkable jump, 24% year over year.
Right. And those top-line numbers, they immediately set a strong tone, don't they? Dr. Anish Shah, the group CEO, he called it an excellent quarter.
He did.
And he emphasized, broad-based growth across all our businesses. That's key. It suggests it's not just one part doing well, but strength across their whole portfolio.
Yeah, that broad-based point seems important. Digging a bit deeper, consolidated return on equity, ROE, hit 20.6%.
Yeah, strong.
And earnings per share, EPS, at Rs 36.4. Solid profitability for the group, it looks like. Oh, and we should touch on the standalone numbers, too, the core company. Revenue Rs 34,143 crore, up 26%. Standalone PTRs 3,450 crore, up 32%. So yeah, the core business is definitely pulling its weight.
Absolutely. And what's fascinating here, as you said, is how these figures show resilience. The group CFO, Amarjyoti Barua, mentioned they achieved this despite macro challenges, including geopolitical disruptions.
Right.
Which kind of leads to the question, what gives them this resilience? We see other big companies sometimes struggle with these headwinds. What makes M&M different?
That's a great question. I think a big piece of the puzzle is their market leadership, particularly in the automotive sector.
Yeah.
That's been a huge growth engine for them. And here's where it gets, well, really interesting. They've absolutely cemented their leadership. Number one in SUVs by revenue market share.
Right.
Commanding 27.3%.
Yeah.
That's up 570 basis points year over year. I mean, that's a 5.7 percentage point jump. Huge. And the actual SUV volumes up 22% in the quarter. But, is that sustainable? It's such a tough market.
That is the question, isn't it? But that share expansion is strategically vital. It means they're not just selling more SUVs, they're actively taking share from competitors. Maybe their new models are hitting the mark, or their marketing is just, resonating better right now. And profitability is up too. The standalone PBIT margin for auto, that's profit before interest and tax, excluding their eSUV contract manufacturing, that reached 10.0%, up 50 basis points. So it's not just volume, it's efficient growth too.
Good point. And it's not just SUVs, is it? They're also number one in light commercial vehicles, LCVs, the smaller workhorse type vehicles, under 3.5 tons.
Yeah.
Market share there is 54.2%. That's up 340 basis points. But let's zoom in on the EV story, electric vehicles, because that's fascinating. M&M is number one in electric three-wheelers, 38.7% market share.
Okay.
And get this, number one EV revenue market share in both eSUVs at 44.3% and EPVs 40.9%. That's a strong position in the EV space.
It really is. And what's telling is their eSUV penetration rate. It was 5.6% in Q1 FY26, the industry average, only 4.2%.
So they're outpacing the market there.
Exactly. They're capturing a bigger slice of that growing EV pie. And the overall BEV business, battery electric vehicles, so MEAL Ltd, and the eSUV contract work that generated Rs 3,068 crore in revenue.
Right.
And Rs 111 crore in EBITDA. That's earnings before interest, taxes, depreciation, and amortization. So promising numbers, but like you implied, the pace of transition across their whole range will be key long term.
Okay, let's pivot now. Farm equipment, another huge pillar for M&M, right? Always seems consistent. And they're still dominant here.
Yeah.
Number one in tractors. Market share hit 45.2% in Q1. That's up 50 basis points year over year. And they said it was their highest ever quarterly market share. Plus, tractor volumes are up 10%. Pretty impressive given, agriculture can be cyclical.
Yeah, and connecting this to the bigger picture, this consistent strength in farm equipment, it really highlights how deep their market understanding is. Their whole mission, transform farming, enrich lives, it seems like they're living it. It shows how embedded they are in the rural economy. It's a different kind of stability compared to just consumer cars, maybe.
That makes sense, and profitable too.
Oh, very. Standalone PBIT margin for the farm segment was 19.8%. That's up 130 basis points. And the core tractor PBIT margin up 100 basis points to 20.7%. Those are, well, fantastic margins.
Wow. And you mentioned the broader farm business.
Right, not just tractors. Their farm machinery business also hit its highest ever quarterly revenue, RS 309 core. That's 17% growth. Shows breadth even within that sector.
Okay, so strong auto, dominant farm equipment, but M&M is more than just that, isn't it? They're quite diversified. Let's explore the services segment and their growth gems, as they call them. The overall consolidated services revenue was RS 9,874 crore, up 13%, and the consolidated PAT from services, RS 1,000 crore. That's up a whopping 40%.
Yeah, this is where that diversification strategy really comes into play. It's quite a mix. Let's break down some of those growth gems. Mahindra and Mahindra Financial Services, MMFSL, they grew assets under management, AUM, by 15%. But crucially, their growth stage 3 assets, the riskier loans, stay below 4%, actually 3.8%. That suggests stable asset quality, which is key for a lender.
Good sign. What else?
Tech Mahindra, big improvements there. EBIT margins hit 11.1%, up 260 basis points. PAT up 34%. They seem on track for their goal of 15% margins by FY27, plus strong deal wins.
Tech Mahindra's looking better then.
Seems so. Then there's Mahindra Life Spaces, their real estate arm, strong growth, acquired future projects, gross development value, or GDV, worth Rs 3,500 crore. That's like 2.5 times more than before. And residential pre-sales were solid too, Rs 449 crore.
Okay.
Club Mahindra, the resorts business, MHRIL, high occupancy, 85%, added 10% more rooms, and their member base grew to over 304,000. Steady performance.
Right.
And finally, Mahindra Logistics, revenue up 14% to Rs 1,625 crore. Their express delivery business grew 13%. So yeah, lots of moving parts, mostly moving in the right direction.
So this broad mix, what does it really mean for you, the listener? How does this diversification help M&M? Does it make them more stable, give them more potential, or is it, a risk, spreading themselves too thin?
That's the critical question, isn't it? But I think it looks like a major strength that acts as a hedge. If auto faces headwinds, maybe farm or financial services picks up the slack.
Right.
It suggests they've built a resilient model. It's not just a collection of separate businesses. There seems to be some synergy, leveraging the Mahindra brand across different areas. It looks more like a robust ecosystem, letting them tap into growth across various parts of the Indian economy.
Interesting perspective. Okay, let's quickly touch on financial health indicators and maybe look ahead a bit. Consolidated debt-equity ratio, important one. Excluding financial services, it improved, down to 0.05 times from 0.08 times last year. So less leverage.
Which is generally positive, and that's backed up by a very strong interest service coverage ratio. Again, excluding financial services, it's 31.74 times. Basically, they can cover their interest payments very, very comfortably.
Good to know.
It is worth noting, though, consolidated operating margins did dip slightly, 13.30%, down from 13.72%. But interestingly, the consolidated net profit margin actually expanded a tiny bit, 9.61% up from 9.53%. So maybe strong cost control or pricing power somewhere offset the operating margin dip.
Possibly. And management commentary seemed positive. Dr. Shaw talked about operating excellence and resilience. Mr. Barua emphasized capital discipline and operational metrics for shareholder value.
Right, sticking to the plan, it seems.
But there is something new on the horizon, isn't there? These end-of-life vehicle rules, ELV rules 2025, they came into effect April 1st this year.
Yes, and this does raise an important point for the future. These ELV rules bring in extended producer responsibility, new PR. Basically, manufacturers like M&M become responsible for vehicles even at the end of their life.
So what's the impact?
Well, that's the thing. The rules are in effect, but the detailed procedures, especially how the EPR certificate pricing will work, they're still being ironed out.
Yeah.
So M&M can't reliably estimate the financial impact just yet. But think about the strategic side. The likely need to invest in collection, recycling, maybe new partnerships, or even business lines.
So challenge, but maybe an opportunity too.
Could be. It's a chance for them to lead in the circular economy space for autos in India. Definitely something to watch closely going forward.
Right. So let's recap this deep dive into M&M's Q1 FY26. Overall, a really robust quarter, wouldn't you say?
Definitely. Strong market share gains in auto and farm,
Hmm.
impressive growth across their services and these growth gems, and a solid financial footing.
We hope this gave you a much deeper understanding than just the headlines, really connecting the dots on what these numbers mean.
Absolutely. Going beyond the surface level is what it's all about.
So as you think about all this, here's a final thought for you to mull over. M&M has this dominant position in traditional manufacturing, like tractors and SUVs. But they're also pushing hard, leading in some areas, into EVs and this wide range of growth gems. How might this unique mix establish strength, plus that forward-looking diversification? How might that help them navigate future challenges and keep pushing forward on their bold by design journey? Something to consider. Thank you for joining us on this deep dive. We hope you feel more informed and ready to connect the dots yourself.